So we begin with our top story. Europe looking vulnerable as trade tensions escalate.
Europe, obviously, as we all know, has many existential issues.
Structural hurdles.
Structural problems in Europe.
Too many to name.
Once the U.S.-China tension was easing off, they were going to likely turn, towards Europe.
We're going to turn around and pick fights with the rest of the world.
The timing is a bit off from the European side.
There's very little that the Germans can do on this one.
Germany is exposed.
They're very vulnerable.
We know about the weakness of the European economy.
It's disappointed this year. It's been worse than people expected.
Some pretty weak data.
So woeful over recent months.
Europe certainly wouldn't want to fight with the US.
Europe exposed and seemingly the global economy as well as the headline dropped across the Bloomberg. The IMF cutting the 2019 global outlook to the lowest since the financial crisis. With me around the table, Jill Carey Hall of Bank of America Merrill Lynch, US equity strategist Michael Kushma, Morgan Stanley Investment Management, global fixed income CIO, and Bloomberg's Lisa Abramowicz with us as well. Lisa, so much going on in futures actually. I've got to say markets pretty much well behaved through the morning so far.
I am actually very surprised that there isn't a bigger reaction to an escalation in some of the trade skirmishes between the U.S. and the European Union. I mean, people have been suspecting that this would be sort of the next shoe to drop. Here we have the U.S. coming out and saying, you know what, you guys support Airbus. We're going to crack down on that, and wine and cheese, by the way, going after some of the sort of staple European exports, and then the EU ratcheting up the tension backward. Why are markets not responding?
Well, there are dramatic headlines and then there is news. What's new? Jill, what's new about all of this?
Right. Well, I think it's, a continuation of the trade tensions that we're seeing and the more protectionist measures from the U.S. So, I think overall we're looking for U.S.-China trade to be resolved, but this could be the next overhang on the markets in terms of just more uncertainty that trade tensions aren't over and could be here to stay over the long term.
What do you think, Michael?
I think a lot of the good news is coming from China, that the data is a lot better there. Chinese equity markets up substantially in recent weeks, and there's not terribly much worries more about trade with China. It may move to Europe, but China, I think, still remains the key.